Hey, good morning, guys. This is Greg with Ideal Trading Ideas. So today I decided to come online and talk to you a little bit about Zynga, right? So Zynga Inc, ticker symbol ZNGA. Right now, as of close of yesterday, September 21st, we're down to $7.66, down 8 cents for the day, or negative 1.03%. Pre-market, we're up to $7.69, up 3 cents, right? As of September 22nd, or a positive 0.39%, right? We have on November 9th, the upcoming earnings. You have EPS, right? Earnings per share, negative 0.16%, market cap of 8.364 billion, and they don't give any dividends out, right? So they have a dividend yield of 0, right? We have an overview, timeline, ideas, financials, and technicals. And like I always say, I like to go to ideas and try to get a general idea of what other people are saying about the market, right? So we have this person right here on the daily chart. 1D means daily chart, buy of a lifetime. This is what this person is saying, right? It's a buy of a lifetime and extremely oversold. They're saying that it's going to be $9 by December, loading up on calls slowly in August. I'm even buying stock. So this is what this person is saying. They have 5 likes. You can click on it and kind of figure out exactly what this person is saying. And this is what they're sharing, right? They're showing you the little buy areas. This little gray area is a buy area. Another gray area is a buy area. And they believe that, hey, as time goes on, it's going to make its way back up into the $9 area. So we can kind of scroll down. That's what he was saying. And we go back up, hit the X so we can exit out of there. And we can kind of scroll down and look at other people's ideas. This is from February. This is from August. This person is long. And they have the 240 day. And pretty much the same thing. Everybody is long on Zynga. So what we want to do is you can click on, we'll go back to overview really quick. And they've been moving stuff around when it comes to TradingView, but you can click on launch the full chart and it'll bring you to your chart window, right? And as you know, I've already did a video on Zynga before, and I pretty much mocked up what I thought was going to happen to Zynga, right? So remember, we put that first box right here to say, hey man, this is possibly a buying opportunity right around here. We thought that, hey, it would bounce off and go back up. But during that time frame, what do we see? We saw Zynga continue to drop, and it drops down to this area, which we had already mocked up this box. And then we felt like, hey, it would bounce off this little red line. We see that we have it showing these areas where it hit and that it bounced off, went back up to about $9 and some change before reversing and coming back down into the box, which is another buy zone, right? So at this particular time frame, we believe, hey, this is a buying opportunity just like the last guy. Remember, I'm not a financial advisor. I'm just telling you what I am doing with my own money. And I'm going to show you exactly what I've been doing shortly, right? So I believe this is a buying zone for me in regards to option contracts. And that's what I've decided to start doing, right? And we also have this line right here, which is a resistance line that's acting as a support, right? Or which will act as a support. And we can see that that's our resistance lines from 2019, the 52-week high, right? So could Zynga drop down to $6 and some change? Hey, maybe. We're not sure. We hope it doesn't. But if it does, it's definitely going to be a great buying opportunity for some of you who are looking to pick up shares. It is my hope that, hey, the next week we start seeing a reversal, or we're hoping to see it go up just a little bit, maybe back up into the high 7s, and then kind of go sideways. And then the following week, maybe on the second week, we hope to see it back in the $8 range. And the reason why I'm saying is because I have option contracts that expire on October 22nd, right? So I'm looking to see those contracts go back up in value way before October 22nd, because I want to sell them off. So what we're going to do is move on over to our Robinhood account. And as you can see, we have Zynga at $7.69, right? It says up by 3 cents for the day, or positive 0.39%. We can look at it, the weekly chart, really quick, and you can see on the weekly chart, we're down 49 cents or negative 5.99%. On the monthly chart, we're down 99 cents or negative 11.35%. The 3-month chart says that we're down $2.78 or negative 26.55%. The 1-year chart says that we're down 97 cents or negative 11.20%. And then we move on to the 5-year chart, which says that we're up $4.78 or positive 164.26%. So anybody that bought about 5 years ago, that's your price range right here, $2 and change, you're going to be smiling, right? Because you're still up and you've been up for a very long time. So what we want to kind of show you is we have option contracts in place, right? 10 option contracts, says a value of $104. Total return, or today's return, is 0, and total return is negative $32.23, right? Or $32, negative 23.53%. And you can pretty much see what I've done, right? We have $8 call options, 3 sales, valued at 9 cents right now. We have an $8.50, 2 sales valued at 3 cents. We have a call at $7.50 and a call at 8, right? So that's 1 buy call, and then we have 4 buy calls at 8, and we have 23 cents and 45 cents. These are the values of the contracts as of right now. You said we have upcoming activities. As you can see, I'm trying to purchase one more contract at $7.50, and we've placed that. We'll click on it, kind of show you, and I put a limit price in for 39 cents. So I'm hoping to see it slip just a little bit today down to that 39-cent area. We pick up that contract, and the reason why we're trying to pick it up at 39 is because we want to average ourselves down, right? So what we're going to do is click on portfolio and kind of show you exactly what's going on with our Zynga, right? So first one we're going to show is the 750 call, and here it is right here. We have an average cost per share of 55 cents. We have a break even at 805. We only have one contract right now. We're trying to pick up another contract, and the cost was $55. Market value right now is $45. So it's dropped down in price. Today's return is 0. Total return is negative $10. So we're down by $10 or negative 18.18%, right? So what we have to do, or what we have done, is with this one contract, we decided to go ahead and do a cover call option trade with it, right? So what we're going to do is go back one, and we're going to show you where we did a cover call option trade right here, and we did it for 2 contracts. As you can see, contracts 2, right? So we use one of the $8 call option contracts and the 750, and it says our average credit per share is 6 cents, right? So our break even is 856, which means the price that we said we're willing to sell at, which was 850 plus 6 cents added onto it. And then as you can see, the credit was $12. So they gave us $12 for that. So if we break it down a little further, we know that, hey, we picked up $6 for that one $7.50 contract and another $6 for one of the $8 contracts. Today's return is 0 as of right now, and total return is $6 or 50%, which means if we decided to get rid of the contract as of right now, we would pick up $6, right? So we would lose $6, pick up $6. So that's one thing we've decided to do. We've also purchased the one that I was telling you about, the $8 call contract, which is right here. And what we did was we purchased one, and then we purchased 3 more to average ourselves down. So we have a total of 4 contracts. Zynga break even price is $8.29, and we have an average cost per share of $28.5, right? So 28 cents basically. So the cost is $114, and the market value right now is $92. So yes, it has dropped in value as well. So we spent $114, is now $92. Most people say, oh my God, you're down, right? So total return right now is negative $22, and then negative 19.30%, right? We are down. But once again, just like with the other contracts, what we decided to do was go over here and put Zynga up for sale at $8, and but we did it into next week, right? So we said, hey, we're willing to sell at $8, and what they gave us was 7 cents per share, right? The break even is 807. We have 3 contracts out there for that, and they gave us $21. Right now, the value of that contract is $27. So it's actually went up in value. So that's where it's saying that total return is 3 cents, because the value of the contract has went up in price, right? So it's compared to yesterday or the day before yesterday when we got the contract, and today the price has went up. But ultimately, we picked up another $21. Remember, in comparison to the contract, it said that we were negative $22. We now picked up $21, so we only actually are down by $1. Hopefully I haven't confused anyone. But by doing cover calls, we're showing you that we're able to close the gap. And then as we take a look at Zynga, in terms of where we bought at, the price is going to either go up or go down. And it is our hope that we see it go back up, right? That's 92 cents. And we can kind of take a look at the price of Zynga right now. It's 766. Looking at the weekly, we can see that, hey, the low right here was 755. And yesterday it went up to about 771, right? So it is our hopes that we see it slowly but surely make its way back up into the 770s, 780s. Maybe by the end of this week, we're hoping maybe not to go above the 780s range, but surely by next week, we hope to be close to that $8 range. I don't want to be over the $8 range because of my option contracts, but I want to be close to it. And then after that, I want to be able to go ahead and possibly sell off the option contracts maybe the third week out to grab some funds or whatever, right? So that's my idea on Zynga. And what I'll do is I'll show you my my spreadsheet. I always put spreadsheets together to kind of show you exactly what's going on with how I work my Zynga deals, right? So this is the old Zynga deal from August. You can see that I picked up one option contract, 100 shares, right? So it was worth 100 shares. Original cost was 44 cents or $44. It's closed right now because we got out of it, right? We were able to sell it off. So we did a covered call option on it or against it, picked up 6 cents or $6, picked up 13.64% overall. It expired on August 20, 2021. We bought to close that same option contract. That's that covered call option contract right here. It says August premium paid. We paid $2 or 2 cents out, $2 out, negative 4.55%, right? On August 20th, right? That was the expiration date. So out of that $6, we paid $2 back. We picked up $4. And then we sold to close by the end of August for $93. So we bought for $44. We sold for $93. When we add the $93 to 6 cents, minus out the $44, minus out the $2, we come out with $53, right? That's what we have. Option revenue was a total of $53, right? So 13.64%, negative 4.55%, positive 211.36% equals to be 220.45%. This is now closed. This deal is done, right? This was August. We go into our September deal which is what I was just talking to you guys about. And as you can see, we have one option contract, 3 option contracts, 100 shares, 300 shares. The original cost, 39 cents, 25 cents. And you can see it's all active, right? And this is when the earnings report comes out. The break even is now $8.28. And this is all the average cost is going straight across, right? But remember, we did 4 covered call option contracts just over here. And when we minus out the 6 cent or 675, we come out with an average cost basis of 21.8 or 0.218. When we take that and put it over here to 285, that's now going to be an average of 8.218, right? Or basically $8.22. So we picked up $27 total of revenue so far when it comes to Zynga for 4 cover call options. And then we did a 5th one right here on 100 shares that we purchased for 55 cents, picked up $6 right here. And then we pretty much just added together, right? So about $33 we picked up overall when we're looking at it. But we have averaged our cost down on that other one to 49 cents, right? So once again, we are looking to possibly purchase another contract, maybe a little bit lower, 39. And we want to kind of get this price even lower than where we're at right now, and then also do a cover call against that one. And that should be it. You know, as time goes on, we're looking for the price to go back up. We sell off the 1 contract right here, or hopefully 2 contracts to get a little bit more. We want to double the money. And same thing goes for here. You know, 28.5, we're hoping to possibly get 40, you know, off of it, or even double that amount, you know. But if we can get it, we're going to be happy. We're going to come out and we get all our original monies back plus some. So this is what we do when we're doing our buy call options for the month. You guys have a great day. If you have any questions, comments, concerns, hey man, please drop me a comment in the box. I really do appreciate all the love and support. You guys have a great one. Bye.